Hey, ladies and gentlemen, welcome to the 11th episode of Coin News Extra Virtual Blockchain and Cryptocurrency panel discussion. So today we'll be talking about a very pressing issue that people really need to understand. So we'll be talking about blockchain technology and digital assets. So we'll be talking about the meaning, the disruption it has brought, utility, and the future. So joining us today are innovators, experts in the ecosystem. So we have Mr. Omar El Azaiza. He is joining us from Spain. Omar is the CEO of Black Cat Blockchain Investment. Omar, you are welcome to Coin News Extra.
Hi, sir. Thank you for inviting us and well, we are ready to talk about all that passionate technology.
Okay, thank you. You're welcome. So another person joining us is Paresh Daya. Paresh Daya is joining us from South Africa. He's a consultant of fintech, blockchain, and digital asset. Paresh, you are welcome to Coin News Extra.
Great, thanks very much for having me, and congratulations on a great show.
Thank you very much. You're welcome. So another person joining us to talk about this interesting topic is Athanasios Leonard Paris. He is joining us from Greece. Athanasios is a digital currency advisor and tutor. Athanasios, you're welcome to Coin News Extra.
Thank you for having me. Let me just make a note. I'm a lawyer, and we're just specializing in providing this sort of digital currency field, specialized legal service, okay? We don't do investments or any sort of investment advice, okay? Just making a note.
Okay, that's very interesting. So moving to the topic, so we people have been talking about blockchain technology, digital assets. So there have been some misconceptions and misunderstanding in the ecosystem. People thinking that blockchain is cryptocurrency and cryptocurrency is blockchain. So that's why we came up with this topic so that it will be addressed by experts in the ecosystem. So what's the meaning of, somebody will be asking digital assets, and sometimes people prefer to use digital assets in place of cryptocurrency. So what's the meaning of digital assets? Athanasios, can you just, from your own point of view, to give us the meaning of digital assets?
Well, I could argue that a digital asset could also be these sort of virtual coins that you're using in, a mobile game, for example. Digital assets can have a very, very broad meaning depending on how you use the word. What's most important, though, is how are we defining the concept of digital assets legally. So it will largely depend on the jurisdiction you're in, to define exactly what digital assets mean in a specific legal environment. So in this case, everybody can have their opinion in the community in terms of what it means for them, but for the eyes of the law and for the eyes of regulatory agencies, it will mean a very, very different and very specific thing. So for example, when we're discussing about digital assets in the sense of in the concept of the fifth anti-money laundering directive of the EU, you can say that you would probably be talking more about cryptocurrency specifically. But again, depending on where you are using these phrases, you will see different meanings being applied to it. So yeah, you could say arguably digital assets could be what I said at the beginning, these digital micro coins in games. But when you're using this term legally, and in legal documents and in regulation, it could mean any number of things depending on where you're based. So in the EU, it would definitely mean what I just explained, for example. In the US or in South Africa, it could mean any number of things.
Okay, I understand.
I know this is probably very confusing of how I'm explaining it, but I feel like it's important, since we're all here from different jurisdictions, it's important to to discuss, what it means for each country individually.
Okay, Paris, what does it mean in South Africa, digital assets? From your own point of view, how would you say classify or define a digital asset?
Yeah, so I definitely agree with Antonio's, and I think that digital assets is definitely a loaded term, and I think it can mean various different definitions to various different people and have various different permutations in different jurisdictions. Now, when we talk about digital assets in this particular context with regard to kind of crypto and the blockchain space, it could also be regarded as crypto assets or also virtual assets. Because, for example, the Financial Action Task Force actually consider this a virtual asset. So if we bring it back into the context of what we're talking about in terms of blockchain itself, for me, a digital asset is really an asset that is digitally native, and it is potentially secured using cryptography and also potentially over a blockchain network. Now, again, digital assets could mean anything, but in this particular context, we would typically see it being secured on a particular blockchain network and whatever that blockchain network actually is. So if we had to high level kind of segment digital assets, in my mind, it kind of can be thrown within 4 buckets. So the first one could be cryptocurrencies, right? So anything around Bitcoin, Ether, Litecoin, Zcash, etc., and we can sub-segment that in terms of transactionability, privacy, etc. The second one is around what we call CBDCs or central bank digital currencies, and that could be either wholesale or retail context. The third one is around stablecoins, and as we all know, stablecoins is backed by a certain commodity or an underlying asset or derivative itself. And the fourth bucket, which I like to talk about, is around security tokens and utility tokens. So for me, generally speaking, when we talk about digital assets, crypto assets, or virtual assets within the blockchain space itself, I like to segment it within these 4 kind of domains and buckets.
You would like to segment it, and you have really done that, is classifying them into different categories. So, Mr. Omar, or what can you say for the meaning of digital asset?
Well, our friends Athanasius and Paris explained perfectly. At last, we could talk about crypto assets or other kind of assets, but at last, we have a strong lack of regulation, and it's impossible to talk about that seriously without a strong regulation about that. So now the private sector could talk about any kind of assets. We could work with them, all of them. It's not a problem. But when we try to work seriously with one of these assets, we strike with a wall, because we don't have here, for example, in Europe, we don't have any kind of regulation, a strong regulation about that. Maybe an ICO, maybe an STO, or other crypto assets, or stable coins. That's at last we could not talk about seriously about that until we have a strong regulation about that. That's my.
Okay, I really understand you. So we are trying to understand some things and to clear some of the issues around this ecosystem. So we have, having known, and our experts we have on board talked about and defined digital assets. So people will now say, what is blockchain technology? So how do we define and describe blockchain technology so that people will understand? There have been this misunderstanding that blockchain is crypto or digital assets. So what's blockchain, Paris? How can you define blockchain technology?
Sure. So I think the underlying analogy that I really like to use when I describe this to people is if we had to kind of compare blockchain to internet, for example. So the internet is the foundational structure It is the protocol level that defines how multiple packets move around. And if we take a use case on top of internet technology, for example, email, so email is a use case that is built on top of internet technology. Now, if we actually transcribe that into the blockchain world, think of blockchain as a replicated database across various different participants and various different nodes across the network itself. And think of cryptocurrency such as Bitcoin, Ether, Litecoin, etc., as a use case on top of blockchain technology. So essentially, blockchain is the underlying technology and the underlying foundation that powers cryptocurrency. Now, not only does it power cryptocurrency, but it can be used in various different other mechanisms, such as in use cases as fintech, supply chain management, identity, healthcare, and we can carry on talking about the various different use cases. So essentially, it is the underlying foundation for cryptocurrencies.
Okay, you really defined it. Mr. Omar, what can you say is blockchain technology? How can you define blockchain technology?
Okay. A simple explanation about the blockchain. You need to send a packet from A point to B point. And between us, you have a lot of validators, and you never send the packet. That's the question is not the nature of the packet. You could send data, you could send tokens, you could send everything, okay? About information, about data, packet, until every validator don't bring to the rest the okay, it will not arrive. That's simple. Just that. Blockchain is just that, a powerful tool to secure a transaction.
Okay,
That's a good explanation.
A very simple and good explanation, direct to the point. Antanasius, what can you say is the definition of blockchain technology?
Well, I'm definitely no expert because I'm a lawyer, so I'm not, how can I say, so technically savvy to explain, blockchain technology. But the bottom line and how I explain it is, from what I understand, it's basically a huge ledger of transactions, okay? It's validation of multiple transactions which are based on the previous ones. So basically, it's, from what I understand, it's simply the ability of this technology to continuously verify new data by basing itself on old data that was already there. So in this sense, this technology gives us so much potential about what we can do about it, which, to be honest with you, and I know it could be contradictory to our discussion, is that I believe in that the cryptocurrency frenzy the past couple of years has taken so much out of the good blockchain can do in so many other fields that people have been focusing only on cryptocurrency, but take off we could be doing with blockchain. So, like, for example, where I'm based right now, we have this great startup company doing amazing work with blockchain technology and ticketing, for example. No cryptocurrency transactions are involved, but it is based on this technology. So I'm not sure if I could help you with that, but I feel like the previous speakers, were very to the point about the technology itself.
Yeah, you really explained it. Why we need explanation from different angles is that he may be a tech person. The way he defines it may be deeper, but you that are not into tech, the way you define it will make, because we are trying to make it as simple as possible for our audience to understand it. So it's better you even define it in a simpler form. So I wanted us to talk about the relationship between blockchain and digital assets, where it's like some of us has really talked about it while we are defining blockchain technology, because they work hand in hand. At some of the relationship, maybe briefly, what are the relationship between blockchain technology and digital assets? Antanasius.
Well, I feel like we discussed before, it will depend on which digital asset we're talking about. So if we're talking about cryptocurrency assets, or at least assets based on blockchain, then by default you would have a connection because this digital asset is based on this technology. So if you have any, how can I say, cryptographically based asset, one would say, an asset that basically is created and is being used with this sort of technology, then by default, if we're talking, for example, about Bitcoin, then by default we're talking about blockchain. Okay, that does not necessarily mean that we cannot create a digital token that is not based on blockchain. I mean, it's not impossible to do, obviously. So if we're creating a token that is based on blockchain, then by default, you would have this sort of connection. Other than that, I'm not sure if every digital asset in the world is connected to blockchain. No, I would not say that.
Okay, that's what I wanted to hear. Paris, I wanted us to understand because some people think is every digital asset that runs on the blockchain. What's your take on that, Paris?
Yeah, look, I mean, as Antonio pointed out, digital asset is a loaded term, and you don't need a blockchain to represent the digital asset itself. But when you start talking about bringing in the advantages of what a digital asset could actually bring to the global society, you start talking about advantages like transparency, right? Having a look at where that digital asset is, how it's housed, the various different transaction mechanisms. You start having a look at liquidity implications, right? How can we unlock liquidity? How can we start creating interconnected liquidity? How can we start bringing in peer-to-peer transactions between those digital assets? So once we start unpacking, not from a technology level here, right? So I'm talking a higher level from technology. Once we start unpacking some of the requirements, some of the policies, some of the regulations, some of the advantages of what we can achieve with digital assets, we automatically get into the blockchain space in any case, right? Because that's really what we get out of the box from a blockchain in terms of immutability, stored, security using cryptography, etc. So, for example, I think there are a lot of the central bank digital currency talks that are happening with, for example, like the Bank of England and the Bank of Canada, and especially in the US. A lot of the talks, kind of go down the line of, should they use a blockchain? Should they not use a blockchain? But, once you start talking about the advantages of housing a central bank digital currency or a digital asset on a blockchain, you start seeing all of the advantages. And that for me is really where the conversation should actually go. It should be purely led from the perspective of what is the value proposition of that digital asset? What is that digital asset trying to solve? And using technology as an implementer or as an enabler to actually facilitate that particular digital asset. Now, just before I pause there, I'll say, in the securities market right now, in the traditional financial market, we see equities, we see bonds, we see commodities being traded as a digital asset, right? But these are not secured on the blockchain. But once you start bringing in the blockchain conversation, you start seeing a lot of the unlocking of economic value for that particular digital asset. And that's how we need to start thinking about and structuring our minds around digital assets.
Okay, thank you very much. Mr. Omar, what can you say about that?
Well, again, Paresh and Athanasius explained perfectly about the relation between blockchain and cryptocurrencies or assets. But at last, a very simple explanation for who don't know about anything about that is blockchain is the engine and the assets or currencies are the oil or the gas to run it, okay? Because engine needs some incentives, some kind of payments to work. So it's easy like that. This is a very simple explanation about everyone who want to know the meaning of that relation, okay? Engine and oil. And at last, we could discuss about the nature of more complex, as Paresh says, but I think we have a lot of people listening about that who don't know anything about that technology. So that's my apportation to the people, okay? Engine and oil. Blockchain, engine, assets, oil. That's simple as that. Okay.
Okay, thank you very much. We are talking about blockchain, like Paris did mention, if these bonds and other stock market are being moved to the blockchain, that it will be better. So that brings us to the disruptions that blockchain has brought to the financial sector. What are some of these disruptions that blockchain technology has brought to the financial sector? Paris, what can you say about it?
Yeah, look, I mean, I don't think that there's been mass destruction up to now. And, I'm probably going against the kind of, cryptocurrency maximalist out there in any case. But, if you just have a look at the statistics, right? I mean, the current financial system is probably worth around 80 to 90 trillion US dollars. Okay. And that's just the market cap on capital markets. If you had to look at the market cap on cryptocurrencies itself, it's about 200 billion. And in terms of DeFi, for example, decentralized finance, I think DeFi just hit the cap of around 1 billion US dollars a couple of months ago, right? So these sorts of numbers are literally just a drop in the ocean compared to the current financial system itself. And that's why we see a lot of governments and a lot of regulators and central banks, taking a little bit of a step back and being a little bit cautious around cryptocurrencies. But there's not too much of a competition or competitive environment because the actual impact to the current financial system is minimal at this point in time, right? So from a commercial bank perspective, I think that, commercial banks, financial institutions have been, experimenting and playing around with blockchain in terms of operational efficiencies that they can have both from a corporate investment bank perspective and from a retail bank perspective. And I think that they've really, kind of honed down on the various different use cases that they can bake into their particular business model itself. But, I'll caveat, what I'm saying in terms of the, limited amount of disruption to the current financial market is that in terms of digital assets, and especially when we talk about DeFi, right now, for me, it's not about the capitalization of these markets. It's about the foundation that is being laid by these particular markets, right? So, for example, DeFi is, spearheading along with a peer-to-peer market within the savings and the borrowing space, right? And we see this also within the payment sector, and we see this within insurtech and regtech, right? So although these markets are very small at this point in time compared to traditional financial markets, it's about the foundation and the infrastructure that is being built right now for the future in order to enhance, build, and secure new business models that will either be directly competitive to the current financial system right now or completely, potentially eliminate the current financial system at this point in time, right? But again, I don't see that happening anytime soon. So for us that are very deep in the space, we have to be very cognizant about working in collaboration as a symbiotic relationship with the current financial system. And that's how I feel that we can enhance a new financial system going forward.
Thank you very much. Mr. Omar, what kind of disruption do you think blockchain has brought to the financial sector?
Well, as a CEO of my business, we are not really interested in DeFi because we have a very stronger competition and very specialist about banking and financial sector. And we are focusing blockchain as a service for industry, tourism, and other service. So I have an opinion about that. I think we are not competition from banks. Banks will be our principal customers when we have a very mature technology to offer for them. Remember about the SWIFT transactions? Everyone here know about the SWIFT transaction. It has about 14, 15 years. When we have another technology that can supply that system faster and cheaper and secure, one of these banks will accept to start to use that. One system will start for sure, but not now. I don't think it could be soon. We need to develop more tests. Ethereum, for example, need to evolve more about to 2.0, and we need to talk about the GDPR and our relation about the laws and regulation to secure the transactions. So I don't think in 1 or 2 years or maybe more we will see a good develop. But in the other side, we could start to see decentralized options about other kind of business, about banking, about other offers, new offers. For example, in Europe, you could see Together Bank, for example, is another kind of banking, and it could be a seriously competition. But at last, I think in the future banks and that system will fusion and work together. It will not be a competition, okay?
Okay, thank you very much. It won't be a competition. Antanasius, what's your take on that? The disruption it has brought, blockchain has brought to the financial sector.
Well, I think that Paresh made an amazing point about, from what I understand, us three here are not, crypto evangelists, as some would say, right? I mean, we're professionals working into this field. So we're not the type of people who are going to come out and say, cryptocurrency has, destroyed the banks and we're taking over the world. And, that's not what we do. I feel like there's so much good, like Omar said before, coming out of the cryptocurrency field, and so much good technology, so many good ideas, great developers working on many fintech problems, that I will definitely believe that, the way that the disruption has occurred in the financial markets is simply because, like Omar said, we're just finding ways to do things, cheaper, more safe, and more easily than we did before. So right now, that just sending money to another country, especially if it's outside the European Union, you have to send it to Russia or China or anywhere else. You have to skip 3 or 4 correspondent banks all over the world just to get one transaction through. So I don't. That's the sort of thing that we're seeing now with cryptocurrency, and everybody is saying, but how is it possible to transact in Bitcoin, for example, and do it? Okay, sure, it's not very fast sometimes to do some of these transactions, but it's so much easier, and the cost of the transaction is so low. So I feel like banks are taking a second look on blockchain technology and the lessons learned from the cryptocurrency field and trying to implement them in their own business functions. So yeah, I believe that this relationship will be, it's in the beginning right now, it's disruptive to them, sure, but it will begin and it will grow to become symbiotic in the end and not antagonistic in any way.
Yeah. That's a very nice one from you, Anthony.
Sorry, can I just quickly add there, because I think it's a very important point, right? Especially for your audience and your listeners to actually understand this, because I think your question around disruption to financial institutions is a very big question, and I think that the answer is definitely not binary, right? It's never going to be a binary answer. It's not going to be yes or no, or we're going to hit this at certain point in time. For me, I think that there's going to be a varying spectrum of potential disruptions, but I also believe in a very open and competitive environment, right? And now what we've seen is what this technology is actually brought in, to Antonius's point, is that it facilitates faster, cheaper transactions. It facilitates the transfer of value, by alleviating a double spend. It facilitates, democratization of access. It facilitates the removal of central intermediaries within a particular value chain. So I think that, all of this has been brought in, and now we're starting to see, we have seen, a lot of competition within the financial institutions outside of the commercial banking, right? So, companies that are offering solutions such as wallets, savings, borrowing, lending, et cetera, et cetera. So it all now goes down to how does the current incumbent financial institutions react to this, right? Because it is, as a competition, it is a threat to them. So how are they going to react? So in my opinion, I think that, as I mentioned, there's going to be a spectrum. There's going to be certain aspects and domains where there's going to be a symbiotic relationship between, fintechs and other organizations together with financial institutions. And at the other end of the spectrum, there's going to be, kind of market features and functions that are going to be taken over by fintechs. If that does happen in the future, and we do see it right now, incumbent financial institutions either need to react or they're going to fail, right? So it isn't a binary question or a binary answer right now. I think it's all about market forces and how the balance of scale is actually going to play out over the next 5, 10, 15, 20, 30, 40 years, which is what we're doing right now. We're building up a new financial system for the future generations that are coming ahead of us.
Okay, thank you very much. That leads us to this question. People, there have been, most especially cryptocurrency, people been asking question, if I have cryptocurrency, must I convert it to fiat before I use it? So what are the utilities of digital assets, most especially cryptocurrency? There are some things that are happening in the ecosystem to make people to freely spend their digital assets. Mr. Omar, what can you say about it? Are there some things going on for more adoption and utility of digital assets, most especially cryptocurrencies?
Real use here in Spain and I think also Europe about a real use about any kind of asset out of euro, but we could start to use it in other process. I explained. People are using that kind of tokens to speculate or as a BTC or Ethereum as a store of value. Okay, it's not a problem, but at last it's very difficult with some kind of regulation to use any type of to do any kind of payment. Okay, or establish any kind of business around that kind of token now. I think in the future it could be better, and we are expecting an European regulation, a strong regulation about that, to start to develop secure in a secure direction. Because right now we don't have any regulation about that. I think Athanasius could correct me if I'm wrong, but we don't have here in Europe a strong regulation. At last, don't have any regulation, only just to pay taxes. But I think at last it's so difficult to use right now. But we are in the good direction to develop the technology and the definition of asset to pay. Okay, but not in a near future.
Okay, thank you very much. Athanasius, what are the utilities of digital assets?
Well, see, here's the thing. I'm getting paid in digital assets. Okay, like I have gotten paid by my clients in I think it was XRP. Okay, so I don't have a problem with it because I'm good with my tax obligations. Okay, like I'm invoicing everything, I'm paying my VAT, I'm paying my taxes. I don't see a problem there. I mean, if you're not doing, ridiculously big transactions that will fall under, how can I say, they will fall under anti-money laundering regulations, meaning above 20,000 euros, or skipping over these lines, I don't see a problem, honestly. So long as you're okay with your tax obligations, I feel like if you're going, I mean, the recipient of the payment would be okay to receive a payment that way if they comply with their tax obligations, obviously. Whether or not you or someone else is performing, shady transactions with cryptocurrency, it's not my problem if you're doing that. You know what I mean? So I feel like we're more risk averse in terms of cryptocurrency transactions on a BTC kind of level. So I believe that there's a big misconception there about how we should be using cryptocurrencies. So I think it will largely depend on what sort of market you're working in. So if you're in China, you're not able to use any cryptocurrency at all. I mean, it's illegal. I mean, there's no way you can do that. But in countries where you don't have this restriction, I feel like if you're complying with your tax obligations, I don't, and of course the anti-money laundering regulations, I don't see a problem for someone to be using cryptocurrency, unless, of course, again, there's this huge, how can I say, impediment like China. And let me just make a quick note here, because I just want to point something out. So we're focusing a lot on cryptocurrency as investments and as as their ability to bring quick wealth to some people. But I'll tell you what, I was working for an NGO for refugees, okay, from Syria. So here in Greece, we have a large influx from Syrian refugees, fleeing the war in Syria. Believe it or not, one of the ways they were able to bring over, their livelihoods here, bringing over, the assets that they had in Syria. Obviously, they were not able to get these huge wads of dollars and euros in their pockets, and swim across the sea. They were able to do it because they were able to put it into, the 16-digit code, their wallet keys, and they were able to bring over their assets in cryptocurrencies. And that's amazing. That's literally amazing. If we're talking about the utility of cryptocurrency, we should be talking about that. It's amazing how it can help people flee war and survive in a different country. And we're not talking about that. And we should be talking about it more, because that's one of the most amazing things that cryptocurrency can do for you. That was only a point. I just wanted to bring it out because it's not being talked at a lot.
Yeah, you really made a good point there. Thank you very much. Paris, what's your take on that?
Yeah, not very much to add. I think my panelists have covered most of it. I think that there's multiple uses for cryptocurrencies and digital assets, right? And again, we can segment it into transactionability, or whether it's a store of value, whether it's an investment, etc., etc. However, we still at some point in time down the value chain need to convert in and out of fiat currency, right? And I think that is the reality of the situation right now. So, a great point in terms of the Syrian refugees, bringing their life savings and their funds over to a different country. But again, they would then need to convert that back into fiat within that particular jurisdiction in order to transact or pay rent or buy food, etc. So again, I think that there's multiple use cases for crypto, but we still at the mercy of sovereign fiat currencies in terms of on and off ramps and what is actually being accepted within a particular value chain that a person is working with. Now, again, that also goes down to regulation within that particular jurisdiction. So not many countries have issued cryptocurrencies such as Bitcoin or Ether as legal currency or legal tender, and that for me is one of the biggest hindrances of why this hasn't hit mass adoption. But I think we definitely will get there with multiple currencies having multiple use cases for particular segmentation.
Thank you very much. We're talking about making it cryptocurrency legal tender in each country or jurisdiction. That brings us to the final question of this panel discussion. How do you see, or what is the future of blockchain and cryptocurrency or digital assets? Paris, still with you.
Yeah, look, myself, I'm very positive. I'm very optimistic on the future of digital assets, particularly secured on blockchain network. I think that we can, have many advantages, not just in first world countries, but also in emerging economies, and especially so on the latter, right? I truly believe that, we can develop solutions for emerging economies like Africa, Southeast Asia, South America, Eastern Europe to a certain regard, in order to build very disruptive, innovative solutions for the people and solving problems that the people face on the ground today. Now, if you just have a look at the US itself, right? I mean, US is a first world country, but in terms of the quantitative easing and the helicopter drops that they're doing in terms of, deploying money to people, they are still posting checks in the mail, right? And this is, one of the leading countries in the world, and they are posting checks in the mail where people have to then take those checks and go and deposit it at the bank, or potentially take a picture, whatever it may be. But my point being that these sorts of, kind of technologies, features, and functionalities like digital assets on the blockchain can alleviate all of these various different concerns. And that was just one use case that I was tackling. So for me, back to your question, and I'll kind of pause it there just now. We're building a company called Fraxium, and our building blocks on Fraxium is really at the heart of it digital assets. So our clients that build on Fraxium itself are looking at, how do they tokenize traditional securities and also start issuing digitally native assets on a particular blockchain. So for me, digital assets is really at the heart and the foundation of how we build a new cohesive future financial system for the global population.
Thank you very much. Mr. Omar, what's the future of blockchain and crypto or digital assets?
Well, we have very good perspective about both. About cryptocurrencies, we are just in the beginning, and I think the digital money is the future. Just not centralized, like China, for example, as a decentralized token for the rest of the countries. So I think it's just one way to go, and is in the digital assets to work in maybe, for example, 10 years, 20 years. I don't know exactly, but we will work with digital assets for sure. I'm a little worried about a possible future war about between the centralized money, okay, and the centralized money and the possible interchain. But it's other aspect we could see in the future. Respecting for blockchain, I think it's a very powerful tool we are developing, but in a slow time. And think about that. We have now a COVID-19 crisis and the economical crisis incoming, and maybe the curve of adoption could be slower than we want. But at last, blockchain will be introduced in a lot of sectors: industry, tourism, DeFi, banking, even politicians, to audit some things, to clear the system, okay? So at last, step by step, we could introduce, for sure, we will introduce blockchain in other fields. It's just the future.
And that's a very bright future. So, Athanasius, what's your take on the future of blockchain and digital asset and crypto?
Well, I'll approach the issue from a different point. So, as a lawyer, I'm trained to, and I took an oath actually as an attorney, to uphold, the law, human rights, and a number of things, that are good in the world. I'm very worried because I agree with Omar and Paresh in the sense that we will be seeing cryptocurrency and digital currency, not necessarily cryptocurrency, because crypto means, there's cryptography involved, but in general, digital assets, I would say, coming into our lives more and more. But I'm worried in the sense that, imagine what's possible if centrally someone is able to freeze your assets, no questions asked. It's easy, like I don't have any cash here, but if you have cash money, you're free in the sense that, it's my money, you cannot take it away from me unless you physically remove it. So I'm worried, is this more or is it less economic freedom? And we should be really careful about how we approach these issues ethically, not only legally, because legally we will find a way, but ethically, is this more or less economic freedom? I think this will be something that we will have to cope with in the coming years, and we'll have to solve it, because today it is really easy for someone to freeze your assets in a bank. And it takes some time, it's not automatic, there's ways you can stop this from happening. But imagine if it's so easy that you can just put a blocker on a digital wallet. I mean, I'm concerned that we're moving towards a cashless world, and maybe that's okay, maybe it's not, it's a question of discussion, but I'm worried about what this will mean for people's rights, for people's freedoms, and for the people to be able to have an economic freedom that is not constrained by the ever-present, George Orwell type government or bank trying to control, the assets I have in my wallet. And I'm not saying, and let me make a note here, I'm not saying we should, promote tax evasion or we should promote money laundering. That's not what I'm saying. I'm only saying that for the good citizens, for the people who are, doing their part right, maybe this is not something that we should be having. And, having seen what happens to countries that, and especially in Cyprus, for example, where I teach, and I'm also an attorney there, in 2013, we had, the halving of bank accounts. Everything you had above 100,000 euros was wiped off. No questions asked. Nobody was asked if you want to do this or not. No questions asked. Anything you had over 100,000 euros in some banks, liquidated, deleted in one button. Think about that for a second, what it can do if we have digital assets everywhere. That's one thing. Second thing, and I'm sorry for taking up so much time, I feel it's important to have education about cryptocurrencies. I'm very happy to be teaching for the MSc in digital currencies at the University of Nicosia in Cyprus. I'm teaching the regulation of digital currencies. And it's great to see, professionals coming to us to teach them these issues, and especially professionals from the government and the banking sector, so that we can get them more familiarized with these issues and, get them more in tune with the technology so that they're not so uncomfortable around it, one would say. So I feel like education is something we should be really working on in the coming years to educate more professionals in this field.
Thank you very much for all your contributions. We really appreciate it. We have come to the end of today's panel discussion. Thank you, Antonicius, for joining us on CoinUses panel discussion.
Thank you for having me.
Okay, thank you, Omar, for joining us.
Thank you for inviting us.
Okay, thank you, Paris, for joining us.
Great, thanks very much for having me. It's been a great discussion.
Okay, thank you.